You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. Speaking of the website, by the way, I hope you guys are liking the new skin, the new coat of paint, the new functionality that's coming online over there, too. And we've been talking about it for a while. We've been saying we're going to do it for a while, but now it's actually happened. So hopefully you're checking it out. If you haven't, make sure you get on over to theoptionsinsider.com, click the tires, and light the fires, as they like to say. And let us know what you think, what you like, what you'd like to see. You know, we're always tweaking, we're always upgrading, always improving. Anything online is never a finished thing. You know that if you work in the online space. So let us know what you think. We do like to hear from you guys, of course, on this show as well. Send in your questions or comments. We do indeed like to hear from you guys. Hope you also enjoyed the live spectacle that was our option block. We did a different day this week from, of course, the Option Pit Pro Traders Summit this week. That is, in fact, still going on. That is where the Greasy Meatball and the Rock Lobster, I can testify, they are in Chicago. And they're not far from here, but they're holding down the fort over there at their soiree. I might see if I can bug them during the show to see if I can pull them away from their clients, their mentees. But in the meantime, we've got holding down the MIAX hot seat, our old friend, Mr. John Smollen, the Executive Vice President and Head of Exchange Traded Products and Strategic Relations. He has the longest business card in the business. John, welcome back to Volatility Views.
Hello, Mark. Thanks for having me. Excited to be here.
John, before we get started, really quickly, I asked this to Shelley recently. I want to get your kind of just 2 cents as well. I know you were very intimately involved in the planning of that big conference, all that content of which has hit our network. Hopefully our listeners checked it out and enjoyed it. All the panel audio, as well as, of course, all the great sit-downs we had with all sorts of people throughout the business. But that was very much your baby. It kind of landed in your lap. In addition to all the other fun things you guys have going on, launching a third exchange, launching a volatility product, launching an equity exchange, all this other fun stuff you have going on. You had to plan a conference. I'm just curious, in hindsight, are you happy with the way it went? And A, B, maybe more importantly, how excited are you that it's over, to have passed the hammer?
I am extremely happy that it's over. It went, it's kind of one of those things. It's a high profile thing that an exchange, takes responsibility for, because, as you know, this is a very big business, but the amount of people that are in it is pretty controlled. It's not a huge group of people, and so when you get together and you have this event, you want to make sure you do it the right way. And, we had looked at what previous events had been going back over many years. And we were saying, okay, let's try and put something together that would make us, that we would get excited about and would make us happy. And what I was very pleased about at the end of the day, Mark, was that what was important to me turned out to be important to a lot of other people. And that was the feedback we got. So I'm extremely happy it's over. Don't ever plan on doing another one, and I'm happy that people were excited about what we did, and we got a lot of positive feedback, and I'm glad it's done and over with. Though.
Yeah, that's always the feeling, right? You enjoy doing it, but then you're like, oh, I don't want to do it again anytime soon. But I could certainly empathize with that. I liked a lot of the content. I liked the fact that you added an entrepreneurial focus to the event. I like the fact that I told you this before, not just the fact that I was part of it, but I like the fact that you actually brought in the purview of kind of the Lifetime Achievement Awards to recognize and acknowledge the fact that there is a lot more going on out there in the world of options than just the exchanges. Exchanges are fun, but there's other stuff too, and it's fun to acknowledge that. So check it all out if you haven't, listeners. TheOptionSider.com. You can get our special events feed, of course, is the way to get that as well. If you would just want to mainline the conference audio, they have that. We have some stuff from the trading show here in Chicago. We have stuff from the Swan event. So lots of good stuff there to keep you guys busy. Meanwhile, though, let's keep you busy with a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down the week that was and indeed still is from a vol trading, trending, analysis, unusual activity, all of those fun perspectives coming into showtime here. So about 1 p.m. Central, 2 p.m. Eastern. We're coming on the heels of our non-farms here, the first non-farms here of coming into the beginning of what is typically the summer doldrums here, but not so much now with all this trade war going on. Usually, June, not exactly a rock'em sock'em month, but this month we'll see. And of course, the non-farms coming in here with job creation not looking robust, shall we say. Payrolls up only 75,000. That's a lot lower than the 180,000 that the market and the economists, aka the dismal science, what they were expecting out there. Unemployment still 50-year low of 3.6%. And average hourly earnings, if you're into such things, year over year, up 3.1%, 1/10 of a point lower than expectations. So all of that kind of getting put into the stew, into the pot to maybe reinforce the narrative we've been seeing for a while. Certainly kicked off last week with the Fed's comments that it does maybe seem like a rate cut is in store for the market. So all of that kind of reinforcing that the market mostly, for the most part, liking what it's seeing out of that. Coming into showtime here, we're seeing most of the major indices catching a bid yet again. So pretty much erasing the massive sell-off we saw earlier. Now these days, a distant, a mere memory in the rearview mirror. The NASDAQ up nearly 2% today. The S&P up about 1.25%, and the Dow up a little bit over 1%. So the Dow, the laggard of the bunch today. And interestingly enough, it's still one of those weird days where we're seeing enough out there. Usually the event risk comes off the table, aka the non-farms. We're heading into a weekend. Usually you'd see the vol take a bit of an exhale, seeing a rally in the broad market. And yet that's not what we're seeing. We're seeing VIX cash anyway. It's kind of been dancing with the 16 handle for a little while. It can bounce through it, get through it ever so briefly, then rally back north again. Again, kind of reflecting the fact that the curve is pretty flat out there, and the vol market is saying, we don't really know what's going on out here. We don't know what other shoes are waiting to drop. So we're going to kind of keep things flat and maybe not. I mean, there's crushing going on, of course. And look how fast it got from where we were last week, which last show, of course, we saw we were at about an 18.5 in both spikes and in VIX cash. So we're off 2.5 handles from there. So they definitely came for it. But it seems like maybe some of that mitigating effects, both spikes and VIX cash now rebounding a bit off of that 16 handle. VIX cash at about a 16.35, spikes at about a 16.20 or so. So it seems like 16 is that line of demarcation. Even with the weekend, even with the non-farms done, even with all these other things going on in the broad rally, they seem a little bit hesitant to crush things down even further. Let's look here really quickly out across. You mentioned the term structure of the VIX futures, aka the place where all volatility questions, their answers lie somewhere in there. We may not be able to read them very easily, but they're in there somewhere. And coming into showtime here, we saw, again, the cash. It was the backwardation was gone. The cash was once again back where it's supposed to be, below that front month future. We saw not quite a half a point premium, about 0.4 of a point premium from the front month future, the June contract, to the cash. And of course, about a 1 point, almost exactly 1 point premium for that second front future, that July contract, to the cash. So we're still seeing, and then still the rest of that narrative is still pretty much flat, and more flat. I mean, you're talking about 1720 in the AUG future, 1743 SEP, 1745 in October, November, also 1745. So yeah, you could go from SEP to NOV, and it won't cost you much at all. And if you're going to roll from AUG to SEP, you might as well roll all the way out to November, because it's pretty much going to cost you the same. And if you want to go to DEES, it's even cheaper. It goes back down to about 1715 in December. A fact we've talked about many times. The seasonality of volatility, I get it, I know, but recent history has thrown a little bit of a wrench in those works, and usually the market has enough recency bias to at least price some of that in, but they're not doing that right now. So you can actually roll out to DEES and get yourself paid for that. So there you go. You can keep your protection on all year, and if you're rolling, it's not going to cost you anywhere near as much as it used to. Our old friend VVIX as well, also coming off pretty aggressively, off about 10 handles. It was about a 95, threatening that magical triple-digit level, which is where we know things start to get hot and heavy out there. Coming off this week, off about 10 handles, down to about an 84.5. It was about 94.5 last week. So a lot of things going on in the world of vol. Let's get to what's going on in some of these products. John, last week I was talking with Shelly, and I kind of want to get your take on it as well, because I know it was kind of a big deal for you guys. You did, I guess what you can term it, a little test, or I guess a market maker did a test, and you guys kind of went along with it and looked at the results. But you saw, because some of the talk is, what could go on if you tighten these up, maybe in anticipation of that future coming online. And you saw an interesting spike, pun intended, in volume as a result. Why don't you walk us through a little bit of your thoughts of how that happened, what happened, and what were some of the results you saw, John?
Sure. We had a big market making firm that trades here, who've been doing a lot of back testing and getting comfortable with their values, decide to see how it looked, how it worked, and they put in their parameters, and the markets got tightened up, and we've gotten some data that indicated that we were as competitive as VIX, if not more competitive, kind of for that time frame. And we got to see kind of people trading, going back and forth. We saw, for us, which was nothing compared to the VIX product, but for spikes, we got to see it kind of work. We got to see how our system did, everything that goes in behind it that makes it seamless to work great. And then the market makers kind of they backed off a little bit. They've looked at what they did. They kind of evaluated, and they seem to be quite pleased with how it works. So it was a good kind of test by someone that's going to commit capital, and it went very well.
In addition to that big test, I got so excited talking about that. I want to go back really quickly, give you a chance. It's been a few weeks since you've been on. What's been lighting up your tape? What's been catching your eye in the world of volatility and indeed in spikes since the last time you and I chatted a few weeks ago? Actually, was it back at OIC? I think it was about a month ago, wasn't it?
Yeah, it was a month ago. What's been catching my eye is actually it's not so much what's going on the screen, but it's the inquiries and the different people that are connecting to us and reaching out to us and beginning to prepare for that for when we launch the futures product. Even something we had a very large bank yesterday make a very small trade for a customer yesterday, and it was a customer we hadn't seen, and the size of the trade a few contracts, but we got to see someone from the bank trade into us, execute, get a fill, go back. And that's the kind of, it's a very small thing, but it's like, wow, okay, those guys are connected. Because that's eventually, the connectivity and the distribution is what's going to make the product, once the screen gets more competitive. So little things like that, brokers starting to hook up, questions from brokers about how to clear CMTA, how to move stuff around. That's the stuff that's not seen in the bid ask, but for us here at MIAX, very encouraging signs for us behind the scenes.
Yes, indeed. That's the kind of thing that you need, right, to get a product. That's the little details that don't get the headlines, don't get a press release, aren't exactly the sexy things you first think of when you're listing a new product. And yet that's the devil is in the details. When you're launching new issues, I've seen so many come and go. So glad to see that you guys are nailing down those issues out there. Speaking of things nailing down a trade, we talked about that test. That little bit of tightening, a little bit of squeeze that went on out there in Spikes land. So let's start there. The OI still looking pretty strong. Remember, coming in off of May expiration, there's a decent amount of OI. Then a lot of that went away for May, and it looks like it was taking a while. People were obviously keeping their powder dry, waiting for the futures to come online. But that test last week did drive a lot of new paper. In fact, the OI has pretty much 3x from where we were about 2 weeks ago here, coming in not long after May expiration there. So a lot of that stuff coming back onto the board. Let's just look here really quickly. What were some of the biggest positions out there in Spikes land right now? It's going to be the June 25 put, which is actually fairly deep in the money put. So interesting selection out there, followed by, looks like that's still that. Oh, no, actually, no, the June 20s, and then the June 14 call. So a little bit more relevant in terms of in the money stuff going on here again, and then the June 25s. I think that's part of that old vertical, that 2025 that's been on and indeed has been rolled at least once so far. So you got some persistent paper out there. So good to see that OI has indeed been growing, even if a lot of it came from that big experiment last week. Let's see what was going on out here in the rest of the vol market. Let's look at the VIX options as well. Coming into showtime, markets are up strong. Non-farms used to be a big driver for the space. Let me get your thoughts on that really quickly, John, too, before I break down the VIX options. Because obviously you were on the SIBO, you traded for a number of years. When I was on the SIBO, it's interesting. Non-farms was kind of it. Non-farms was a big deal. Everyone stopped what they were doing to watch for non-farms. Non-farms was a market mover. It was the event everyone kind of had to be there for. And these days, it doesn't seem like it really has that same power. Is that your take as well? Looking at the vol space now that you have a product in it, is non-farms kind of a bit of an also-ran, or do you think it maybe still has some lurking power out there?
No, I think it has lurking power. I think it was kind of the negative today because it's like, hey, they missed, which means there'll be the certainty of having a rate cut. Again, talking as a former trader. The market interpreted that as more bullish than as opposed to the bearishness of missing the report. So that's why the market is what it is. Today's one of those days where you kind of scratch your head and hope you had no position or the right position, because this is what makes you want to go back and go to grad school days like this when you get it wrong.
Yeah, days like today, those are the ones where, maybe I should go back and be a lawyer like my mom wanted, or whatever it was, a doctor, whatever the case may be, a pharmacist, a cobbler, whatever it was your parents wanted to be. That wasn't a trader. All right, let's move on here to see what is trading out here in the vol space this week. Fairly decent, not a huge day out there in VIX options land, about 270,000 contracts on the tape. Coming into showtime, if you're wondering how that fits with the average number, the average was over 700,000. It's dropped off a bit now, down to about 679,000. So not quite half the ADV on the tape. And on a non-farms day, usually you used to be able to expect, blow the doors off. But these days, that's unfortunately kind of par for the course. Maybe they'll hit their ADV, maybe not. Doesn't look like maybe with the latter half of the day is going to be super action-packed, but you never know. An errant tweet or two could could destroy all that. I had someone, John, maybe it's kind of sad, a sad state of affairs. I was at actually that event this week, and I was talking to some of the attendees there, and I kind of made that same comment about non-farms being, maybe not the event it used to be, and they laughed. They said, "Yeah, the new non-farms now is Twitter, and a tweet from the administration has become the new non-farms, John. It's become the new market-moving event. It's usurped the old economic data." And then maybe a little bit of a sad state of affairs for us in the market. What do you think?
No, you're absolutely right. The over the years it's changed. It used to be the money supply numbers used to come out Thursday night, and then there's been 2 or 3 or 4, but this one's been pretty consistent. But you're right. Now it's you mentioned earlier you're going to talk tariffs at some point probably today, but the tariff talk is probably what's going to drive the vol market. That's where it seems to be right now. But we're looking for the new hot topic, and I believe I'm with you. I think the president's Twitter account is the Dan Dorfman of the 2019. For those who know that name.
Wow. Now you're going back, sir. Now you're dating yourself.
I'm dropping it. I'm going old school. So.
Yes, the guy who used to trade against his own column. Good stuff there. Good memories for the old market moving events. Maybe we haven't. When you think about it in those terms, that was kind of shady. So I guess in those terms, it was this. Maybe we're better. Maybe we've improved. Who knows? I'll leave it up to the listeners. Let's see what's going on out here. VIX Options land this week. Our top 10 big positions. What was lighting it up out here? Let's go from the bottom to the top here. Number 10. The June 27th, about $1.43 on the tape. Number 9, our first and indeed our only August on the list. The AUG 37 halves, 145,000 contracts open there. Number 8, the June 20th, $1.47 on the tape. Number 7, the June 37 halves. So that's a strike we talked about before. I was joking about it with Matt from Orats not too long ago when he was on the show about what is this new fascination with the 37 half strike. It's in a couple of months now it's been open. There obviously could be some spreading going on, but those were opened independently of each other, I'm fairly certain. And it's just interesting to see. Usually the 30 strike has the magnetism maybe, and that's still there. Spoiler alert, we'll get to some 30s, but 37 half, maybe 37 half is the new 30. Our first put on the list, at least from the bottom, are the June 15 puts, 172,000 open of those bad boys. Number 5, the June 14 puts with 183,000 open. Number 4, here we go, the June 30s, our old friend the 30s. Always has to be a 30 somewhere. In this case, it is number 4, 187,000 of those contracts open. Number 3, June 22 is $1.98 open. Number 2, our final put on the list, getting some puts right up there in the top 5. The June 16 puts, 208,000 contracts open there, and rounding out our top 10 here. Number 1, June 25's 316,000 of those bad boys open. Total about 7.5 million contracts outstanding, about 5.6 on the calls, and about 1.9 million on the puts. So call still leading the dance. Let's roll on out to see what was trading out there today in some of the big vol products. VIX land today, again, kind of an active day, but not a rock'em sock'em robots day. The biggest print, at least single leg print going up out there today. Looks like some AUG 15 puts going up mid-market for, 87.5 cents, exactly mid-market, splitting the upright side. Those went up late though. So a little bit of reading the tea leaves into what was going on there. Also saw pretty decent sized call roll, about 19,500. I say roll, looks like a roll. Has all the flavors of a roll, but we don't know for sure. The July 25s going up 51 cents, 19,400 times versus the AUG 28. So getting into what we said before, that flatness of that term structure. And he had to roll up a little bit as well. So not just July to AUG 25s. He had to go up to 28s, but getting that roll done for a cent. Looks like he probably, they went up on the bid on both, so it's hard to tell for sure. It could be opening but on both, but it seems like it has the flavor of a bit of a up and out roll, and doing it for a penny, which is kind of interesting given what we're seeing right now, taking the opportunity, while coming off a bit, to roll up and out. Somewhat interesting selection there. And then the July, expiring on the 10th. So these are the weeklies. 21 calls going up about 12,000 times for 70 cents right off the bid there. Yesterday looks like more upside rolls were kind of the order of the day. The big trade of the day yesterday was 28,000 of the June 22, July 22, July 37 half roll, vertical, three-way swap, call it what you will. Looks like paper maybe roll in the June out to July with a bit of a upside kicker into a vertical. Either way, that did it 28,000 times. 3x doing the 22s in June for 28 cents. So again, kind of splitting the uprights there again. And again, when you have multiple legs like this, they can fudge those numbers a little bit to make it kind of line up however they want. 83 cents on the July 22s. And 25 cents, exactly mid-market almost on all these for the July 37.5. So it has the flavor of, looks like a bit of maybe taking the Junes off the table, rolling out to July and putting an upside call kicker against it. You're paying 83 cents versus 28 cents. So you can maybe see why they maybe would want to have that extra leg to help finance some of that. Not the craziest thing we've ever heard. Wednesday, the big trades were not that big. 11,500 of the July, expiring on the 3rd. So once again, in the weeklies, 22 calls going up for 60 cents. About a dime off the bid. These were 35 cents wide. So you get out to July in the weeklies, and they get pretty wide. 35 cents for these calls here. So a dime off the bid on those. 11,500 times. That was opening, as well as the 37 halves also going up 10,000 times in June on the bid as well for a whopping nickel. Someone blowing those out. Those are not opening, so it could be someone. Talk about the 37 half strike. Had some magnetism. This could be someone who maybe decided that magnetism wasn't for them anymore. They were getting the heck out of Dodge, taking the nickel bid while it was there, and getting the heck out of Dodge. Tuesday, actually the biggest trade looks like of the week, pretty much in one trade. Looks like a June put fly. Was 16,000 of the June 14 puts for 8 cents, and then 32,000 of the June 15 puts for 22 cents, and then 16,000 of the June 16 puts yet again for 52 cents. So doing that for about 8 and then 8 again. So it looks like about 16 or so cents net for that fly. If they did indeed buy that, it is, let's see here, 16. Looks like where these went up, yeah, again, it's all kind of splitting the uprights exactly. So I'm going to go out on a limb and say they probably bought that one. It was opening, let's see. Actually, none of these legs are opening. It kind of shows how much OI is available on these June puts. It's a ton. But what's interesting about it is that's pretty near term. That's not even 2 weeks here for this fly to kick in and get some action going, getting down to that 15 strike, and you kind of want to hover there if they are indeed buying it. But then again, they have that extra leg in case the worst comes to pass. So not the worst trade I've seen. Interesting one. Maybe we'll put a note on this one. Let's watch this one. And again, they could be taking it all off, in which case that kind of ends that. We'll know that pretty soon. But we'll keep an eye on this one. Maybe we'll come back to it next week or in a couple of weeks to see how this put fly is faring. Meanwhile, let's go on, rolling on out to the other big product. I know a lot of you guys like to trade and trade pretty aggressively. I was talking to some of you this week at the Option Pit event. You love yourselves some VXX. And when I say love, I mean you love to short it. And that's pretty much what we got going on out here this week. Coming into showtime, we saw VXX at about a 28. That's about 2.5 handles. Remember last week, it was north of that 30 level, that magical, mythical 30 level that everyone kind of fixates on. We're back below it again, so start slinging and arranging your put spreads and your 1x2s and everything else you guys like to do to the downside there. So 2.5 points below where we were last show. Remember, we kind of had the trade war come, and then it went, and then it came again, and then it went again. We're kind of on that latter portion of that now, where the trade war vol came and went and came back, and then it's going out again, and it's pretty much, seems like they've squeezed it about as far as they're going to go, at least for now here. VXX today doing about 131,000 contracts. Easy for me to say. The ADV out there, about 270,000 contracts. So it's been doing some decent paper of late. Let's go really quickly through the top 10 out here, see what's lighting it up in VXX land. Start from the bottom again. The VXX number 10, the June 39 calls, about 34,000 of those. Number 9, our first put on the list, the June 22 puts, 34,000, almost 34,000 exactly of the June 25 puts. So looks like the OI is almost exactly the same. So it looks like a bit of some vertical action going up out there, 25, 22 vertical there. Number 7, the June 80s. Talked about how there still is some optimistic upside paper here, and that's it, the June 80s. 36,000 of those bad boys. Number 6, the July 42s, the comparatively reasonable July 42s, about 37,000 of those. Number 5, the June 23 puts. So right in the middle of that vertical there, 38,000 of those. Number 4, the June 45s. 40,000 of those bad boys. Number 3, the June 50s, 46, almost 47,000 of those. Number 2, our final put on the list, the June 24s with 50,000 of those bad boys. That is kind of the put du jour. So you got 25, 24, 23, 22. A nice little put strip open for size here in VXX right now. Number one, though, is not a put. Number one is on the call side, the June 40s. 59,000 of those bad boys. So maybe some folks flocking in after, the big pop we've seen, maybe thinking 40 would happen. We never really threatened 40 with all of this trade war going hither and yon. Never really threatened that 40 level. 30 was kind of a little bit north of 30 was kind of pretty much the best we could do. But still, the 40 is open there for size. So someone's still rolling some dice there that we're probably, at least they're hoping probably, that we're going to see a little bit more trade war upside from a vol perspective before all is said and done. Certainly by the 21st of June. At least that's where their money is. Total of nearly 2 million contracts outstanding, about 1.2 million on the calls and about 800,000 on the puts. Let's look really quickly into what was lighting it up out here before we get to some other topics. The VXX. Today, the big trade was actually a bunch of even number 5,000 lots going up here for interesting how strange everything was in blocks of 5,000. And they weren't all the same time. They weren't all related. So interesting stuff. We saw a June 25, 27 put spread going up 5,000 times for 65 cents. Looks like 27, 25. This is not opening, so it looks like it could be. It's probably, given where we are, it could be closing, but maybe not. Going up here on the NOM. Then we got the June 27 half. June 27 half, and then June in the 7th. So expiring in the weeklies, June 7th. Which, of course, is today. 28 half puts. Probably, I'm going out on a limb and say it's probably a roll there. 74 cents for those versus 5,000 of the June 27 half puts for $1.04. So paying looks like about 30 cents, or maybe selling them for 30 cents. Looks like they went up on the bid, but the bid was a penny wide, so you can't really judge. That could have been some weird stuff lurking in the book there to distort that market there. But look, they could be rolling out for another 30 cents as well. But either way, rolling looks like for 30 cents out to June. Regular expiration, that wasn't enough. 5,000 of the June 27, 29 put spreads going up again. We had that earlier. Now this is a different strike. This is 27, 29 as opposed to, and that was also on the 7th. So yeah, it looks like another roll from the expiring on the weeklies today, the June 29 puts out to the June 27 puts. So a lot of rolls out in time, not down or out or anything like that, just straight out in terms of time. And looks like doing that one for actually, looks like a bit of a credit, about 30, 40 odd cent credit, which is going up on the Pearl, by the way, there, John. So getting a little bit of VXX love for you guys out there. Yesterday, 5,000 lots for some reason seems to be the order of the day in VXX lately. I'm not sure what's going on with that. 5,000 actually in 13 this time of the June 27 puts, also going up for 72 cents. A big trade in VXX this week came on Wednesday. It was 10,000 of the June 20, expiring on the 28th. So again, in the weeklies, 40 calls for 32 cents on the bid. Went up as a buy right. Looks like someone may be getting the heck out of Dodge on some upside and saying, let's get out of here. But you never know. It could be, if they opened and buy, they have the stock leg. So again, when that stock leg gets to work in there, the options prices not exactly reliable as to what was going on. And then also 9,000 lot looks like vertical of the June 30 expiring on the 14th. So on the weeklies out to the July 35s, 9,000 times doing that for looks like about 34 cents or so. Interesting stuff. So there you go, John. Look at that, all that VXX going up on the Pearl. Who knew you were such big players in VXX, sir?
Oh, that's why I say we keep under the radar.
Yeah, that's true. The secret home for other volatility products. You never knew. Not just spikes, listeners, but you can trade your VXX, all your other fun stuff there as well. Speaking of trading and what's going on in the space, the numbers came out from OCC this week for May. You know, John, this has kind of been a big topic of discussion. I polled a lot of people at the beginning of the year. I polled our audience, polled a lot of industry people as well at events like STAC here in Chicago and others, because obviously 2018 was a record year. So coming into the beginning of the year, I thought we would ask everybody, what do they think? Do they think we would blow the doors off 2018's levels, or would it kind of be a bit of a drop down in terms of volume levels? Everyone, almost to a person in our audience, in the industry, wherever I went to events, they were all super bullish on volume. They thought we were going to blow the doors off 2018. I was a little bit more. I didn't want to be. I wanted to see the numbers higher, but I just thought that seemed like a bit of a bridge too far to me. 2018 had some crazy events that really led up to all that happening. Of course, VIX Apocalypse in February, this big sell-off again in October, the lingering, ongoing trade war that really added a lot of fuel to the fire later in the year there. So there were a lot of seemingly one-off aberration events that kind of combined to make 2018 the year that it was. It would take something similar to make those levels again. And I don't know if the market, that would even be healthy for the market to have more of those events hot on the heels of 2018. That's a long way around to saying, listeners, everyone was very bullish. Myself, unfortunately, I was the one bear on volume. And it seems like so far, at least, that is indeed the case. The numbers come out of OCC. May was a good month, as you might imagine. May, usually kind of a quiet month leading into summer. This year, not so much. Up 13.1% from last May. So decent numbers. The highest total volume for May in OCC's history. Year to date, though, it's still down 8%. So May wasn't enough to turn the ship around. Still down 8% from 2018's record-breaking numbers. Let's hit some of these really quickly. Overall exchange-listed volume up about 13%. This is options. OCC clears a lot of stuff, listeners, not just options. If you break down just the options, it's up to about almost 12.9%. Equity options drill down a little bit further, up about 10.8% from May of last year. Cleared ETF options volume up 16.4% from May of last year. Index options volume up 33.2%. That's a big highlight because index options have been kind of a dark spot for the space. Index options have been taking it on the chin of late. This month up pretty strong, 33.2%. The futures also, interestingly enough, despite the fact that the only thing they have left to clear it from a futures perspective really at OCC pretty much are the VIX futures. Seems like those are actually doing pretty well. That's been another black spot for OCC ever since VIX Apocalypse and things like XIV went off the board and SVXY kind of got neutered. It really killed a lot of the demand for VIX futures, and we've seen those have been just terrible as a result. So some of this could be, it's comparing to a very weak May from last year because this is post-XIV meltdown. So last year's May was pretty weak. It could also be maybe a sign of a resurgence out there with all this volatility we've seen out here of late. I mean, the curve has been very flat. Usually that's not a huge driver for a lot of VIX futures action, but it seems like maybe in May that was the case, up 20% from this time last year. John, I'm sure May was a pretty active month for you guys over there in MIAX land as well. Any interesting highlights come to note, sir, looking back at the numbers?
No, I mean, we participated with the, the industry being busy. Again, it's we're kind of, slow and steady, building out our business, building out opportunity and functionality. But we don't get those big block trades that are probably super sexy for some of the other exchanges. Will be in the future, but just kind of business as normal here, and our customers seem to be happy, and then our market makers are doing well. So that's what we focus in on. So not much more to report than that.
I never got a chance to take your pulse at the beginning of the year on this issue, so you get an added advantage of coming in midway through to make your prediction. But I'm curious, were you a big believer at the beginning of the year that we could really beat 2018's numbers, or were you kind of thinking that was a bit of an outlier year that would be hard to match anytime soon?
I would have been on volume down for the year, just by watching how the market over the course of my career has, it's kind of an ebb and flow thing. The what do you call the collapse of February?
VIX Mageddon, VIX Apocalypse, you can call it many things.
VIX Apocalypse, that essentially, I mean, those are events that are similar to what happened in 2008, similar to what happened in 2001. You can kind of go back. There are spots where you see it coming out of 87, 89, all those places where there was a big kind of black swan event that just came out. And then what happens is, there's a turnover in open interest. People leave the market. People come back in the market. People need to recapitalize. And generally in times following that, there's usually a drop in volume. So I would have been in the drop in volume category just because of I've found that the healing process from big events, like what happened in February, it's about a year and a half. It takes a while. 87, I'm dating myself, but the time it took for the digestion, people to that took 4 years. The 89 period took 2 years. It takes a little less, but I'm in a camp that would have taken a year for the whole market to kind of to get healthier, so that you could see increased volume. So I would have been on the downside this year.
Yeah, I was surprised at how many people in the industry, people who ostensibly know all those things you're just telling me, maybe they were just cheerleading. Maybe they were, maybe they just couldn't bring themselves to say down year, but it didn't seem like that was going to be an easy feat to replicate. So many people were so gung ho. They were believing. They were drinking the Kool-Aid there, John. And I know it's hard. You come from an exchange. It's hard to say those things. Say, oh, maybe a down year, because that's not a great thing. But still, 2018 was an outlier. I don't think if we have a little bit less volume, but maybe we don't have one of those crazy tumultuous events like a VIX Mageddon again, maybe that's not the worst thing. We didn't see a lot of great developments come out of that outside of some volume. We saw a lot of great products people liked to go away. Other issues happen as a result, allegations of all sorts of shady dealings, and you name it. So maybe we don't need more of those anytime in the near future. Let's see what else is popping off. If you're tired of big macro vol, I get it. I understand. Let's go micro a little bit here. There are still some things popping off here this week you may want to pay attention to. On Monday, of course, we had Box. There's so many various boxes. There's Dropbox and Box and everything else. But Box on Monday. Tuesday, getting into some of the retail stuff, there was, let's see, what did we have here? GameStop and Salesforce. And Wednesday, Campbell Soup for all of you in the packaged soup arena. There you go. And Vera Bradley for the ladies out there who like their floral bags. And then, of course, the big one everyone was talking about was Beyond Meat. Yesterday, I had my first Beyond Burger earlier this week, and I was actually surprised. It was very good. As a devoted carnivore myself, I could see myself having more of those. So that's saying something, and probably why their stock is rallying so hard, and the fact that they can't meet demand and can't keep up with demand. People are clearly liking what they're up to. I haven't had an Impossible yet, so I'm gonna have to have one of those too, so I could compare and contrast the two. John, have you had a chance to sample any of these crazy Beyond or Impossible burgers yet?
I have not. We were a couple of the guys here were talking about trading the stock this morning, and I needed actually someone to kind of fill me in exactly what I was missing. So I don't know much about it.
You're missing actually I even gave it to my little guy who's not exactly, if he doesn't like it, he'll tell me. And he said, oh, I could eat this, Dad. This is pretty good. So yeah, 2 votes up for us here, which I thought was kind of interesting. So apparently the market must have heard about that, because that's clearly why things are rallying out there right now. But obviously, they can't keep up with demand. Some issues with, where it's sourced and what that's, we saw this with ethanol back in the day, right? Ethanol got popular, and all of a sudden the corn was going in our gas tanks and not on our table, and we saw a lot of unintended consequences as a result. We'll wait and see, how these different Impossible and Beyond are sourced differently, so how that impacts various crops and different things like that remains to be seen, but interesting stuff here going on out there. If you like all the earnings move and earnings move analysis, listeners, head on over to theoptionsinsider.com. The brand spanking new. If you want to get straight to the articles, you see the tabs up top there. It says Options News and Articles. You also see an account section there. It has not really doing anything yet, but that could come with some cool stuff pretty soon. So stay tuned for that. If you get in there, you'll see the earnings move reports there. I think the most recent one up there is from yesterday, actually. So hopefully we'll have some good stuff coming up for going forward here for the earnings move. Let me just see here really quickly. This one does not have Beyond. This is the results for the day before. We saw Ciena and a few others popping off there. So you can check those out. Again, theoptionsinsider.com, or head on over to ORATS, ORATS, to get the premium version. Check out their blog there as well. They do a lot of great stuff out there, and they put a lot of great data for you guys absolutely for free. So it's worth heading over there to check it out for yourself. Speaking of checking you guys out, let's do that now with a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, let's get to your questions here. Got a couple in a similar vein, going beyond just broad equity vol here from Elliot and GLN09. We'll do Elliot first. Elliot wants to know, looks like Bitcoin is getting very volatile again. What are we seeing out there right now? Well, good question. It actually is in line. It dovetails very well with our question of the week to you guys this week, which at the beginning of the week, when it was exactly at 8,500 Bitcoin, we asked you, it's hovering at 8,500. If you had to make a 1 month, so end of June, right out to the 30th there, options trade expiring end of the month, what would you rather do? Would you rather buy the 9,000 call, buy the 8,000 put, sell the 8,000 put, or do some other things? And you guys wrote in with all your other suggestions. We love it. Doing iron condors, doing iron flies, all the fun stuff you guys like to do. And so far, it seems like, and this has been the kind of the way for a while, and not surprising now because we have seen some very aggressive price actions since that poll was first listed. It dropped from 8,500 below the 8,000 level down to the mid to high 7,000s again, and it has since rallied all the way back up. So it's broken the 8,000 handle several times. Now we're broken it again to the upside again, up to 8,071 coming into showtime today. So you think that 8,000 put would be lighting it up. And it is, but not by a lot. 35% of you saying you want to buy the 8,000 put, 31% saying you want to sell it. So a lot of you want to harvest that risk premium, even though we broke through it by several hundred handles earlier this week. And 29% of you saying you still wanted to buy that 9,000 call. And 5% of you coming in with your various and other and sundry questions. And GLN09, too bad Simon isn't here. This is the question that would be perfect for him. He wants to know, is there a Bitcoin VIX? Yeah, there kind of is. The Ledger X folks have a thing that they're actually calling the Bitcoin Fear Index. I'm sure the CBOE lawyers, if they haven't already, probably would be contacting them saying maybe you want to dial back that branding a little bit. But they do have one they're disseminating out there. And then Simon, those guys from T3 of Spike's infamy, also working with our other friends over there at Acuna on a Bitcoin volatility index. And I do believe that is live and available now. I don't have the John. You don't know off the top of your head. I won't make you speak for Simon, but that is live. They are disseminating that now. Are they correct?
Yeah, I'm not sure exactly what they're doing. Like you said, they're doing it away from us. So Simon, I haven't kept up on the loop on that, but he probably find it out to the T3 website for sure.
Yeah, when he wakes up, Simon, and listens to this, because it is crazy early over there in Sydney, I'm sure he'll be writing in with all sorts of his ideas. Yes, it's live. Here's how you can find it. So, yes, but that is, I'm pretty sure, I believe, live. By the way, if you want to know what are we seeing out there, that's what Elliot asked for Bitcoin volatility. A great place to go. I've recommended it on our Crypto Rundown show. I encourage you guys on this show as well. If you're even remotely intrigued by Bitcoin and crypto volatility, and there is a lot of it out there these days, if you want to just see what the heck's going on, a great place to go, just like this question asks, SKU. It's SK3W, not .com, it's .co. So SK3W.co. We had those guys as a guest on our Crypto Rundown show not too long ago. They put out some of the best analytics on the crypto space, and it's all completely free. Just log on over there. Not even have to log in, just head on over there. Click on the Bitcoin options or the futures, whatever floats your boat. You can see all this great data. I'm looking at it right now. The realized 1 month out there has kind of been on a rampage of late. 30-day realized in Bitcoin, it was in the 20s not too long ago. Then it got up to 40, then it got up to 60, and then it got up to 80. Now it's 95 as we speak. So that's realized volatility. I could talk implied, but then you're kind of talking about the various venues and how good their quotes are and how good their actual markets are and how tight they are. I don't worry about that. Well, I look at the realized, and the realized is almost 100%. So that alone should tell you that there's a lot going on out there in Bitcoin. Not many names out there in the equity marketplace that can sustain a 100% realized vol for too long. And yet Bitcoin, at least for the time being, has been able to do that. Let's keep going. What else you guys have on the brain? Oh, here's a little bit of love, John. This comes from Eastwave. This is the 5-star review from Eastwave. I'm not sure if this is iTunes, Google Podcasts, where this comes from, but this was sent in here. He says, extremely insightful information delivered by a very knowledgeable and, in parentheses, and affable, group with great guests on frequent episodes. Great job, guys. And he also puts in parentheses, I miss Don Schlesinger. Yeah, we all do. We all love Don. Don's the best. He's still lurking out there. They're still crunking away on their realized volatility products. So hopefully we'll get to talk about that more when that eventually goes live, because that is a great idea out there. But thank you very much. Look at that, John. All the love you guys are getting over here. You're part of a now very knowledgeable and affable group. How you like that?
I need to get that recorded, because that's not normally how I'm described.
You need to go home and tell your wife, I am an affable fellow. Have you ever been described as affable before?
I'm gonna have to pick Shelley up when I tell him that too. So
I love our audience. They well written reviews. Everything spelled well, using parentheses, affable. How often do you see that? I love our listeners out there. Let's see. Here's one that's right up your alley, John. This goes from Delement, D Element maybe. They're asking here, I thought the major obstacle for the approval of new vol products was the lack of an underlying future or ETF. That seems to be the case with the NASDAQ volatility products. How were the MIAX team able to get their spikes product approved by the SEC without an underlying? Is that a normal practice? And that's a good question, actually, John, because we have people ask us before, talking to MIAX. They've had multiple iterations, or not MIAX, talking to NASDAQ about what they're working on. They have multiple iterations of different vol products, and they've said many times that a big stumbling block for them has been the lack of any sort of underlying. You guys are able to get yours approved. Maybe walk our listeners through, John, some of that process, and is that abnormal, or is that kind of normal for the space?
I can't speak for for what the NASDAQ guys are going through. I can speak for, so it's kind of there's a two-pronged process. There's obviously getting the options listed on the CFT on the SEC side, okay, which we were able to meet the standards that they set for getting the product up and listed, okay, and then the future side is a separate process that we're in the middle of, okay, which involves us, as you know, that we're doing a partnership agreement with MGEX, the Minneapolis Grain, to list the product, and we're working through. There's a couple steps over there. There's a 4-part improvement process that we're going through MGEX with the CFTC, and it gets into the weeds about how the product's made up, what's involved, the volumes, the notional values, and we're working right through that with them, and we're well into that process with them. I can't speak for exactly what challenges NASDAQ have, but 2 separate processes. The option piece is that theoretically you could trade spikes options and do baskets in the SPY to trade them. That's kind of old school. That's how way back when. Remember when SPX and OEX launched, pre-future, they traded with the basket. So that's kind of how SEC gets around it, and then the CFTC side is a whole separate process. So we're 3/4 of the way through the future side, and hopefully we'll have some positive news to share with you and your listeners in the coming weeks.
I think that's a key point there. I mean, it's not like you guys listed this on some Pink Sheets name that only trades by appointment, right? It's on SPY. So I mean, I think that definitely was not an accident. And that definitely worked in your favor. So even though there is no technical underlying in terms of a future, SPY itself is fairly liquid. And so I think if you want to get off, like you mentioned, the baskets, that's the way it used to be done, then I think that certainly was definitely worked in your favor here. Let's look here. We're coming up against it. Let's see. Here's look at this. You guys are getting MIAX guys getting all the love here on the email this week here, John, and the Twitter questions and everything else. Let's wrap up on this one, because this seems like a pretty quick one. We got time for this one. This comes from the Mike, maybe the Mick, probably the Mike. He wants to know, can you ask the MIAX team if there are any plans for ETPs on spikes similar to VXX or SVXY? Thank you very much for your program. Well, you're welcome for the program. We love doing it for you. John, I'm guessing you guys are probably focused on the future right now, but we get this question a lot. People want that universe of other things, right? They don't just they want to have they don't just want their candy. They want to have their candy and their pie and their cake, right? So I guess I'm sure if you have any plans, you can let us know. But do you? I think you're focused on the future right now, probably, right?
Yeah, we need to get the futures product out, and then we need to get the community to start to say, hey. Understand that there's another product out there that can compete against VIX, and get ourselves started there. So, I want to talk about my induction speech into the Hall of Fame, but I got to first learn how to catch and throw, and that's that. So I love where the guy's thinking, And I hope to be able to answer that, or the company does, MIAX does, down the road. But small steps, and we got to get the futures product out, and then from there we'll let this develop. And we're in the beginning of a marathon, where we're just making the turn out of maybe the half-mile mark. So we got a ways to go.
Yeah, and once that underlying gets listed and things start trading it up on there, I'm sure the ETF issuers and providers will be hitting you guys up left, right, and center. If it follows the same course that we saw in other vol products, that's a pretty popular way to go. But you're right, you need to kind of get that first mile out of the way first, then you can get rolling. But it is good that people definitely seem to be looking for more stuff out there. So that is a good thing. I'm not sure if the crystal ball is a good thing this week, but we'll find out anyway. It's time to keep on rolling right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. I know the real reason why the meatball and the rock lobster didn't want to come on today is because they didn't want to have to face. They don't have to face their predictions. I'm not afraid. I don't run. I'll stand here and face the music. This is, of course, the portion of the show where we attempt, sometimes more successfully than others, to prognosticate what the vol market holds in store for us for the coming week. And last week, it was myself and I believe the Greasy Meatball and our guests from the Gelber Group. Interesting stuff. I was at about a 14.5 to 14.75 VIX cash to spikes. Mr. Meatball was at about a 13.25, so he was feeling a lot of erosion to 13.40, and the Gelber guys were a little bit north of me, about 14.99 to, oddly enough, 15.06. It was a very precise prediction. That if you go that 15.06, they actually are one of the closest. They're almost within our 1 point window. They're at about a 16.09 coming in the end of the show here in VIX cash, and the spikes is at about 16.20, 16.21 coming into the end of showtime there. So we'll go with the VIX. We'll make it a little bit easier because it's closer, and they get to be close. I'll say they're within the window, so I'll make them the winners. Unfortunately, they are not here to accept their various fabulous prize, which is they were here. Of course, I'd be lauding them with all sorts of great praise and indeed tasty adult beverages. But they're not here to accept those prizes. So I guess the next closest is me, even though I was well off of a handle. So our rule for thumb, listeners, for this segment is you got to be at least within a handle to be considered somewhere close to victory, and preferably a bullseye within like a tenth of a point. No one was near that this past week. So I guess that means I'll go first. The Meatball and them are not here. So I'm gonna have the ghost of them pick for us. That's our tradition, listeners, when they're not here. The ghost. Let's say the ghost of the Meatball. He's gonna pick. He's gonna be very, very aggressive on the erosion next week. He's gonna go for a 9.2 VIX cash and spikes. Myself, looking ahead to next week, we've seen. I don't want to say the floor is in because those sorts of things are silly, but it does seem like there is a little bit of support around this 16 level in the broad vol space where, things crush. I mean, we're coming into a weekend. Non-farms are done. They should be hammering the hell out of this, and yet we're still staying around these levels. The futures are still flat, showing there still is a lot of uncertainty out there. If they announce the trade war is done, all bets could be off. If they announce yet another extension to another country of the trade war, then all bets could be back on again. So we are in that very weird, almost binary venue. So I'm going to say we're going to be, let's see, I was at about a 14.5 to 14.75 last week. I'm gonna bump that up a little bit this week. I'm going to say, that's a good question. Okay, I'm going to say 15.75 on the VIX cash, and spikes will be about a 6. Let's go 16 even. Let's go 16 even on a spike. So not that far off from where we are here this time next week. We have a lot of back and forth, hither and yon, upside, downside, settling out around here this time next week. John, I won't make you guess because it's no fun guessing your own product. And the regulators may look askance at such things. But to listeners, if you guys want to play ball, you want to guess, send in your questions, your comments, send in your guesses for the Vol Views, and let us know the crystal ball. If you win, if you get a nice bullseye, who knows? Maybe you win some fabulous prizes. All right, unfortunately, That music, listeners, means we've come to the end of a very fun show here on Vol Views. Looking back, looking forward, looking sideways, talking about you and approval processes, earnings of all tasty, delicious Beyond Burgers. What more could you ask for from a Volatility Views show? But before we go, let's go back around the horn and see what everyone has coming up the pike that may interest you. John, we'll start with you. I know you guys always are working on the future. You're working on a bunch of other stuff over there. The forthcoming Viking, a.k.a. the volatility of spikes. Anything you could share with us on that front we can look forward to in the coming weeks, sir?
Now, we're kind of in this holding period as we work with through the regulator. A lot of internal work going on that, again, the market will introduce to the market, throughout the third and fourth quarter. But we're in the holding period as we wait for our approval.
There you go. If you want to learn more about spikes itself, in the meantime, check out that very snazzy video they have up there. Kind of everything you want to know about spikes in a couple of minutes. It's MIAX Options, MIAX Options.com/spikes. Got it all there. Contract specs, methodology, the quotes, charts, data, all that good stuff, as well as that fun little video. And if you scroll down a little bit, you can also see this fun show. So if you're not listening to it on the MIAX site, you want to check it out, that's a place you can go. And of course, the Meatball and the Rock Lobster are off doing their big annual event, so you kind of missed that, unfortunately. But if maybe you want to check out the archives and any other stuff that they do, optionpit.com is the place to go. And on behalf of myself and the Greasy Meatball and the Rock Lobster, we'll give them a little shout out, as well as John and the team over there at MIAX. I want to thank all of you for downloading, streaming, subscribing, sending in questions, for voting in our polls, all the other fun stuff that you do. Keep it coming. We'll see you back here next time for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.